Welcome everybody to Vicente's Massachusetts Cannabis Market Trends and Economic Forecast. Really pleased to have everyone join us today. We're going to try and be efficient. Just a quick introduction. My name is Adam Fine. I'm a managing partner of the Boston office of Vicente. I'm joined here by Andrew Livingston and Mitzi Keating. Mitzi's with Citron and Andrew is with our firm. And we wanted to do this for a while, this kind of economic side of things for a little bit, and especially, and I think now is even as timely as can be, as we all know, the cannabis market nationally is, might I say, in the toilet, for lack of a better word. We're really kind of seeing what in my experience has been the kind of largest economic downturn in the cannabis market since I've been doing this for about 11 years. And so as lawyers, I'm a lawyer, no one else on this panel is, but as a law firm, you know, it pains us to see the market in the condition that it is. We're also finding that we're very busy and we're just doing different types of work. But we thought it would be helpful. Andrew Livingston, who has been, I think is at the firm is for about as long as I have, and Mitzi, who's been in the Massachusetts market for, I think, probably at least 8 years, really helpful to get their two perspectives on where are we in the larger landscape here in Massachusetts. What are the positive things? I tend to be a cynic, as some people may know, and I'm actually quite optimistic on the Massachusetts market as a whole, and we'll kind of get into that today. And I'm really excited to have Andrew and Mitzi as a late addition, and I'll let them introduce themselves. But we're going to try and touch on the macro, get into some of the nuance that I think are affecting the Massachusetts market, and also just emphasize that there is real opportunity if you are on this webinar looking from other states to come into Massachusetts. I will just say this: don't believe everything you hear about the Commonwealth, and I will talk about some of the positive things today. But there's some really, I think, regulatory changes that are going to go into play around host community agreements, which is going to add 3%, we hope 3% of gross revenue, or up more revenue into the pockets, or more margins, I should say for the businesses here that have been kind of suffering under that additional tax. That's hopefully going to be going away as we get guidance here in the next few months from our regulators. And then there's other things. We have very good regulatory body in the Commonwealth. We have low illicit market as compared to other states, and a strong regulatory regime. And I think that really paints, there's some downsides to having a regulatory burden, but I think the upsides outweigh the downsides in the sense that it is, I think, a limited license state to a degree, and Andrew will kind of talk about those numbers when we look at other states. So with that, I'm going to stop talking and hand it off to Andrew to really run with things, and then we'll take questions as the webinar goes.
Thank you so much, Adam. It's a pleasure to lead the webinar. I'll introduce myself and allow Mitzi to introduce herself as well. So again, my name is Andrew Livingston. I'm the Director of Economics and Research at the law firm. I've been here for over a decade, analyzing the Massachusetts market since you first issued medical cannabis licenses. And I'm not an attorney, so nothing here is legal advice. Everything here is just market analysis. Some crystal ball gazing, some analysis of existing trends, and all of the data that we're going to be talking about today comes from the state itself. So it comes from the Cannabis Control Board's open data portal with some kind of in-depth analysis. And I've been doing this analysis on the same sorts of data sets for Massachusetts over the last probably 3 to 4 years. And happy to follow up with clients who are interested, or anyone who's interested. Please reach out to us. I sell some of this data on a flat fee. And allow businesses to utilize it for the projection and their valuation purposes. So thank you so much. And Mitzi.
And Andrew, can I just add your disclaimer, because I can't help myself. This webinar is not legal advice. It's not accounting advice or business consulting advice, and just has it's provided for informational purposes. So I just want to make that, to double down on that, so people are aware.
Thanks, Adam.
No problem.
So hello, everybody, and welcome. And thank you to Andrew and to Adam for having me as part of this webinar. I'm really excited about talking about my favorite cannabis market, of course, which is Massachusetts, because it's really how I got my start in cannabis. I'm a partner at Citron Cooperman, which is a full-service professional services firm, formerly known as a CPA firm. I'm a CPA and a CFE, Certified Fraud Examiner. I also am a recovering Massachusetts local politician, which is really why I ended up getting into the cannabis industry in the first place. So I was on the Board of Selectmen for about 5.5 years in a local town. So I understand a little bit more about the challenges at the local level, which I know that many of you who are looking to the Massachusetts market, if you're not aware of those kind of challenges, it's really important to understand the local political landscape as well, which is cost prohibitive in some cases, but certainly, there's many more towns that are coming online, pretty much every time we go to another town meeting. So I'm here to add some commentary with regard to the information that Andrew and Adam are presenting today from Vicente, and I'm excited to kick off this webinar with you guys.
Awesome. Thank you so much, Mitzi. So, today we're going to be covering a number of different things. It's going to be broken down first looking at demand, then looking at supply, and then looking at some data details on retail stores and where they're opening up. This is really going to focus predominantly because this is what we're pulling from the data set on the adult use market. And so, if people are interested on the medical side of things, happy to follow up later on with that. So, is the Massachusetts market growing or contracting? What sort of product categories are on the rise? People often think, okay, if there's flower, concentrates, maybe flower goes down, concentrates goes up. So we'll talk a little bit about the interplay between those. Interesting data about outdoor harvests and seasonal outdoor fluctuations, which we are seeing as a significant contributor to, it's hard to call it market turbulence because, seasonal outdoor harvests are also normal. But not just in Massachusetts, but also in Michigan, Colorado, Oregon, many other states. The outdoor harvests really do impact prices significantly. Where are those new retailers opening across the state? It's obviously a little different. Some localities open up earlier, they get their act together faster. Others take longer to license. And how are consumers and entrepreneurs reacting to all of these market changes? These changes in prices and these fluctuations. Next slide. And so, as we are analyzing this, I want you guys to, whether or not you took intro to economics back in, high school or undergrad, think about it from the aspect of what influences other things. So, you can shift one lever and turn one knob, and it often changes other things. So, when we're talking about market growth, contraction, it's important to think about, are we talking about value or volume, right? So sales value, the amount of money that is collected, whether it's taxes, but, really the spending is a combination of sales volume and prices. So something important to think about. Declining prices often increase volume demand. So consumers react, which is known as, price elasticity of demand. As prices decline, consumers will purchase more up until a point, up until they're essentially purchasing all the cannabis that they need. And so it's important to kind of look at that price elasticity of demand and how things are reacting. But also important to recognize that sometimes things are sticky, right? So that's a term economists use, when one effect doesn't immediately cause another effect, or there's some kind of lag time or lag prices, between those two factors. Another important thing is to consider that the wholesale market affects the retail market, but the two are different. So if you're in a very competitive cultivation environment with a lot of independent cultivators, or in a situation where there's most of the retailers are vertically integrated, and so there's a bunch of cultivators playing musical chairs to try to get their product on the market, wholesale prices can fall faster than retail prices. If you're in a situation where there's a lot of dense retailers opening up in one area, retail competition can happen faster than wholesale competition. And that's really important as we're trying to analyze who's getting squeezed on their margins in which different sectors.
And, it's interesting, Andrew. I do some presentations, across the country, and I always come up with, I'm a big fan. I was an economics minor, so I was a big fan of Adam Smith and the invisible hand theory. And I've created the cannabis invisible hand, or it's actually the cannabis regulatory hand theory in my own head, right? Because there's all those other elements that impact the actual economics of this industry. The regulations are one, the tax impacts are certainly another. From state to state, as Adam mentioned, the illicit market is another factor that comes in. How do social equity programs play into the economics of this industry as well? And then, there's just different differentiation of products. and what constitutes a premium product. So it's really, you know, not one size fits all, you know, in your standard supply and demand, exactly what you're saying. There's so many different factors that go into it.
Yeah, Mitzi, one factor just to add while I'm thinking about it is, you know, this notion, this idea of the border states, which, you know, years ago we really didn't want to talk about, but as marijuana now is, you know, we know that the federal law enforcement is very, very low. You know, we know that there is a lot of sales at the border, especially we've seen it in the Commonwealth, these border dispensaries still performing exceptionally. Now, will that change over time? I suspect it will, as we see, as Connecticut's come online, potentially New Hampshire, not yet. And New York, which is, I can say one good thing about Massachusetts is we're not New York. So I'll leave it at that. But anyway, go ahead, Andrew.
Awesome. Thanks, Adam. So next slide, please. Awesome. So, you know, let's talk about, you know, what some of that growth looks like and where that's happening. So the state provides, you know, really good information on sales for, you know, bud, shake trim, pre-rolls, concentrates, vapes, edibles, non-edible infused products, topicals. You know, and as we could see, obviously there was that pandemic-related closure, which thankfully, you know, we weren't talking about a U-shaped recovery. That's truly a V-shaped recovery, jumping back into you know, those current market trends. And we saw relatively strong, significant growth between, you know, when stores first opened in November of 2018, you know, up until about the summer of 2021. And since 2021, things have been quite a bit more stable as it comes to sales. You know, if you look closely, you can also see there's you know, seasonal you know, dynamics also starting to occur with you know, essentially sales going up in the summer, then down in the fall, and then spikes in December, or then it falls again. You know, and these are the sorts of seasonal dynamics that, you know, we see in many other markets, and you know, I think will continue. But
Andrew, can I interrupt just to ask you one quick question off this?
Yeah.
You know, one of the things I know that's talked about a lot, and I think is true, and for folks that aren't from the Commonwealth, we do have a very stable economy here. We have a little bit of a labor shortage. We have, you know, overall, I think the economy is very good. Obviously, everyone's always concerned as we see inflation and interest rates and things like that. But you know, we talked about this money flowing into the economy post-COVID, and I think that maybe gave people, not just the cannabis sector, but other sectors, this false sense that there was more consumer demand than maybe is natural. Is that are you seeing that in that kind of spike from when we know?
yeah, Adam, that's a great question. I think we could jump to the next slide, and it's really clear when we look at this on an annual basis. Thank you. So, you know, what you can see here is, you know, we saw, obviously the first year, there's the percentage growth is always huge because we're, you know, comparing it to, you know, only a few months of very initial sales. But we could see that, you know, between 2020 and 2021, we had 89.5% growth compared to, you know, 57% growth the year prior. And that was in part due to two things. One, there was a few months, and, you know, April being 420, we often see, you know, sales spike on that day. And so there was some closure there, but also, you know, Adam, as you were mentioning, we saw a lot of money come in, some of the pandemic relief funds, some, you know, extended unemployment, and really even more so, you know, this is something I've talked extensively about in the media. You know, people were stuck at home, and so they substituted their kind of experiential goods, so going to concerts, going to restaurants, going on vacation, with consumer product goods. You know, essentially ordering in food, or going to the supermarket, or watching Netflix, or buying more alcohol, or buying more cannabis. And cannabis is one of those goods that's kind of like it's a consumer product good that makes the mundane less uncomfortable and hopefully more interesting. And so, you know, a lot of people were stuck at home smoking weed and watching Netflix, and, you know, that's great for the cannabis industry. But as we emerge out of the pandemic in 2021, people are rebalancing that consumer spending across now both experiential and consumer product goods. And so that is why we are seeing you know, some of the declines, really not just in Massachusetts, but across the market, with a high in 2021. It's going to take a while for us to, you know, get back to those, you know, that 2021 trend. And it's really just because that was an unnatural inducement of additional demand because of, what was going on in the world at that time.
And the interesting thing too is, and I know that you'll get into this a little bit later, but if we look at just the straight dollar figures of what the annual growth happens to be, or what the annual sales happen to be, when we consider, and I know you've got the slide on it, when we consider the decline in pricing, that's been happening at the retail level, or actually, the demand is still going up with the decrease in price. So although the numbers look a little bit flat between 2022 and 2023, we're really not kind of looking at apples to apples when you start to look at actually, product sales and consumers and number of consumers entering the market.
That's a great point, Mitzi. And, as I mentioned earlier, sales value equals sales price times volume, right? So you can have a situation in which, it looks like the market is stagnating, but really the market is increasing. The market is, it's maturing, prices are declining a little bit, but volume sales are increasing. And that is what we are seeing. We'll talk a little bit further. But it's also fascinating, as you can see, right? Some of these different bars are growing larger than others, right? So, shake trim versus pre-rolls versus concentrates. It's harder to see here, but as we jump into the next slide, we can really analyze which of these products are increasing or decreasing. So, I will note that in all of these slides, we're just looking at from January 2022 to the current period. And that's really because I want to analyze, what are we seeing in the most recent trends. So when we look at flower and pre-rolls, we're always about 57%, bud is usually about 40 to 45%. Then there's a little bit more, about 40%. And then, shake trim is just a few percent, where pre-rolls at around, 15 to then 18%. And when we look at concentrates and vapes, it's been declining a bit. So let's look at kind of this period of time, really, since the end of December 2022. So oftentimes, we're always talking about how with markets maturing, consumers are shifting their tastes and preferences from flower over to concentrates. There are these new sorts of product types. These are pulling from, what everyone just consumed in the illicit market, which was just flower. But interestingly enough, in large part, and I think this is probably because of the way that prices are impacting the flower market, we're actually seeing the percentage of the market in the sales of flower and pre-rolls increase. So from December 2022, we saw that at about 56.8% of the value, not just the volume, but the value of sold was in flower and pre-rolls, and that increased to 60.3%. While concentrates and vapes declined actually from about 26.6% to 24.9%. So not radically crazy changes, but still significant. Infused edibles have been up and down, but relatively stable. They are down since December of 2022. And non-edible infused products, or topicals, have been such a tiny percentage of the market that we haven't really seen a change there. So if we looked at it in a more detailed area, we could say, okay, well, what portion of this flower demand is really increasing most? And because this is state data, we don't have information on the actual, quality of these different products. We can infer a little bit between shake, trim, and buds. I think we can probably infer quite a bit that shake and trim, much lower quality, much cheaper in volume. And interestingly there, we're from a percentage basis, we saw shake trim increase from 1.6 to 2.6% of the market. An astronomically large percentage change. And while bud also increased from 38.7 to 39.9%, it seems as though probably a lot of that increase is happening with the more budget flower. Oftentimes more budget flower also goes into pre-rolls. We saw that increase from 16.5 to 17.9% in just really the last quarter or so. So really fascinating. Where we're seeing slight declines in concentrates, is really more so with the vape products, where some of those, just the concentrates sold in volume are staying a little bit more flat. I think that's probably, again, because of really kind of the amount of biomass that's being created in the Massachusetts market. Some of that additional supply is going into concentrates, and it's probably lowering some of those concentrate prices too, which one induces that demand for the bulk concentrates, And probably because of the value-added manufacturing associated with vape products, those are a little bit on the more expensive side of things. So what this is telling me, to a certain extent, is that consumers are reacting to this increase these decreases in prices by increasing demand. And we're seeing this most significantly in probably some of the products that are on the cheaper end of side of things. Mitzi, you have any thoughts before we jump to the next slide?
Yeah, I mean, what's interesting is, in the clients that I work with and going through, a number of different dispensaries in Massachusetts, what I find is that there's a huge demand, at the kind of individual level for high THC premium flower. And that one, no matter what, is holding its own in terms of pricing. There's different levels of flower. Our tier 1 highest concentrate, highest THC is really the product that moves off the shelf almost before it even gets there. So, it's interesting because that wasn't what it was, of course, prior to a little bit more of the maturity of the market, but people are really finding ways to differentiate those products. And that's really a great thing about Massachusetts is when you're faced with this type of competition, it's not enough now that we just grow bulk flower and that we're growing it at the lowest levels. We can still sell it over into the manufacturing market and try to make, various products from there. But for the most part, we're really seeing kind of what I'm seeing out there is really specialty products. And those successful clients are the ones that really are able to identify where they want to focus that specialty product on, and they know their consumers. So, there's plenty of opportunity here to stand out in the Massachusetts market.
Absolutely. And another positive component is that you can look at this percentage of flower, and if you are a big flower seller, 60.3% is actually the highest that flower and pre-rolls have held in the market since 2020, not including obviously the weird pandemic related closure period. But we're at actually a high watermark when it comes to the percentage of products in the market being sold in flower. And that's not just in the percentage of the market. Actually, the total value of flower sold is highest in March 2023 than it has been in the last few years in Massachusetts. So you go to the next slide, please. Cool. So let's talk a little bit about some of that price elasticity of demand and what we're seeing with regards to that consumer reaction. And I will note, this data all comes from state of Massachusetts. And when we're looking at the average price of ounces for flower, there have been some deviation based upon this data that I pulled last month versus what we've pulled in previous months and previous years, even when we talk about the historical data. So again, all this data comes from the states, but if things are looking a little different than what you've seen in the past, it may just be because the most recent poll has edited some of the previous data. So you can see here that prices were relatively stable for a number of years, and this is the average price per ounce of flower retail. These are retail prices, not wholesale prices. But starting in about the summer of 2021, we started to see a pretty significant decline. And it's been declining linear till about really the end of the year, in which it's flattened out a bit. And that decline really influenced consumers' reactions, right? So as products started to decline from flower ounces from about 300 an ounce on average, down to about 270 or so, we saw consumers react to that and increase their volume demand of the ounces of flower sold. Now, you might ask, well, what is that? Why is there a lag time? Why is there that stickiness? So it's probably due to a few things. One, so consumers actually needed to see those prices decline to a certain period to realize, oh, wait, things are changing. And two, it takes a little bit of time for, the talk to spread, right? So someone goes to stores and realizes, whoa, this eighth of cannabis is much cheaper than it was 2 months ago. They go tell their friends, and that takes a little bit of time, takes a little bit of a few months. So that's some of the stickiness that I talked about earlier. But what's really fascinating here is that the demand for cannabis flower has actually increased faster than the decline in price. And this is why we're seeing, what we were talking about on the previous slide with the percentage of sales and the value of those sales for flower being the highest that they have been in the last few years. So this also is indicating a good trend, which is there is headroom to grow, right? So this could come from cannabis consumers that are already going to stores, but aren't buying all of what they might want. because prices are high. And it also may be because people who will go to stores, but maybe not as regularly, or will go to stores and only buy concentrates and edibles, but get their flower from friends or home growers or things like that, now buying their flower as well. And so, if we were at a point in which the cannabis consumer in Massachusetts was buying all the cannabis they ever needed, we wouldn't see an increase in demand from a reduction in prices. We would just see, relatively flat. But this shows that there's still that room to grow in that individual consumer demand. Now, how much lower will prices go? How much will that additionally induce more demand? Hard to know. But so now, right now, even though prices are dropping, these trends are actually positive as it pertains to the market maturing.
And just to kind of reiterate Andrew's earlier point, if you're typically used to, kind of the adage, right? When the stores open for adult use, typically we'd see retail sales, an ounce would be about $450, in most stores. And that was kind of where it was sitting in the medical market. But I think, from the open data platform, this also is likely to be taking into account the sales that are happening between, cultivators and manufacturers, where there may be a manufacturing operation going on and it's a transfer for a penny in metric in the system. So I know when we work with our clients in terms of what their metric reports are telling us, sometimes the data can be a little bit skewed and isn't really giving you the full picture. So if you're kind of thinking that from that perspective, this is the average, but what it's really doing is it's showing you that trend, which is exactly what we're seeing in the marketplace for the downward volume, but the increased demand.
And Andrew and Mitzi, maybe, do you think that's a consideration of, what I've always defined as, I think, a great aspect of the Massachusetts market, which is we are kind of a law and order Commonwealth. We've always had an illicit market, but it's, the police were still enforcing, they still would enforce, right? We're not California, we're not New York. Love to pick on those states. But we really aren't, and we don't have that issue, like to nearly the degree, even though we have, high lab testing, we have a high regulatory burden. These are all added costs to the legalized retail consumer marketplace. But it seems, do you think this increased demand are people coming out of the illicit market, or maybe there's no way to know? The small illicit market we have.
We'll talk about that a little further as it pertains to, the Boston metro area. There are still underserved places in Massachusetts, while you're increasing the number of stores, every single month. When you look at the, per capita compared to other states, there are still significant underserved areas, and most of those are actually in the Boston metro. So we could still see some of those individuals can go to the illicit market. I think it's probably, when we talk about like long illicit supply chains and short illicit supply chains, I think probably most of what people are purchasing are short illicit supply chains. So they either know someone who's growing or know someone who knows someone who's growing, versus, I'm getting, cannabis grown illicitly in California and shipped out to Massachusetts, longer supply chains.
Yeah, I was going to say, I think that, here the illicit market is still very much underground, as opposed to, what we're seeing obviously in New York and the bodegas and the crackdown there. So we don't have that kind of visible problem. But one of the things that differentiates the Massachusetts market as well, and I don't know what's going to happen with the New Jersey market, is we have home grow as well. So the home grow does allow for individuals, to also bypass the illicit market if they want to just grow their own plants in their backyard. So that's another option that's available to them. But I do know that, from the perspective of what we're hearing about in the illicit market, the pricing is sitting around $80 to $100 an ounce on the illicit market for product. But I think people are afraid of unregulated product. And I think that is really a great concern, and why people are turning to the regulated market, especially as the prices come down.
Absolutely. So next, we're going to talk a little bit about supply, cultivation, licensing, and how, we're seeing changes in that market. So when we're analyzing this, again, this all comes from the state data, pulled last month. 103 operational cultivation facilities. And when I say operational, I mean commence operations in the, or they're signified as commence operations in the application data. So they could actually not yet be fully opening, but they've received their commence operations. Then, 23 that have the final license, but they're not yet operational. and then 246 that either are provisionally licensed or provisional consideration. And what you'll see here is that the significant majority of all these number of licenses are in indoor small facilities. So 30,000 square feet or less. That's both with those that are operational, those that are final license, as well as those that are still provisional license or provisional consideration. Massachusetts is not dominated by a handful of very, very large cultivators. Now, those very large cultivators will have an outsized impact because of, the amount of volume they could sell and things like that. But we are seeing a relatively competitive cultivation environment when it comes to those number of cultivators and the size of those cultivators.
Yeah, and one thing to add, Andrew, since you're not based here, I think for folks that aren't from the Commonwealth, Mitzi and I are acutely aware of this. When we look at that 246 number on the provisional side, or maybe even the final, we're really seeing, and this trend has been probably going on for the last at least 8 months to a year. Not only, it's the cost to build here, the labor costs, everything. We're seeing that trend just drop off. I mean, there's very few folks, as we know, that we can talk about the drying up of capital in the cannabis industry, but it's very expensive to open a cultivation facility anywhere, but especially in the Commonwealth. And it would not surprise me if the majority of those provisional licenses and perhaps the final are just never going to come to fruition. And that's been a common thing where people will linger throughout all license types, but in particular in the cultivation space. And in fact, what we're seeing is not necessarily new licensing of cultivation facilities, but really the opposite, which is winding down capacity and canopy. So I know, Andrew, you're going to kind of talk about that, but we are absolutely that is work that we're actively doing where folks are realizing their overhead is too high and the price in wholesale is not, it doesn't make sense for them to have the size of footprint that they once had.
Yeah, and really the cost to grow really is what Adam's talking about as well. Is the cost to grow a gram of flower in Massachusetts is quite a bit more cost prohibitive than some of our other states, especially some of them out west. There's the electricity costs alone, and that's one thing that you can see in differentiation and innovation really in some of the licensed operators in Massachusetts, where you may have a cogeneration plant, attached so that you're generating your own electricity. That's going to certainly reduce the cost to grow an ounce of flower, in your facility, or a pound of flower. So, people are starting, because we're in the start of really the maturity of this market. People are not just starting to try to get to open as fast as possible and pour as much money into this facility as possible. They're really starting to be smarter about operations and streamlining operations and, reducing, if they need to, their square footage because they realize that it's not yielding them what they would like to yield as a cost prohibitive measure.
Great point.
And, if you go to the next slide, what we can see, before we were talking about the number of licenses, now let's look at the cumulative size of the operational cultivation facilities. So this is based on tier, looking at the number and when they received their commenced operations, as well as their size. And the most significant thing here, when you look at the background, the two blue, is the huge bump in outdoor cultivation that has happened over the last really 2 years or so. Outdoor cultivators really started to be licensed in the start of 2020, but it was relatively small until about kind of mid to the end of 2021. So the other thing when it comes to outdoor cultivators, right, you have to get licensed at a certain point. And, if let's say you got licensed in July, you're not going to harvest that outdoor harvest in the fall. So when we see that first spike of the adult use plants harvested in the fall of 2021, that was based on those individuals who were licensed earlier in 2021 and in 2020, which is a relatively small amount of outdoor cultivators, caused a pretty significant spike. Then, if we look at this in 2022, and what's odd is that the spike in 2022 actually happened about a month or two previous than I would have thought. Typically, these outdoor harvests happen in September and October, and this one actually happened in August and September, which is a little odd.
Hey, Andrew, can I stop you there? And Mitzi, there's a few questions that have come in, which I want to make sure we hit. Are you able to see the questions?
Yes.
Yeah.
So maybe we can just run through those quickly so we don't forget about them, which I tend to sometimes do.
Yeah, I can answer the third one. It's directed at me. The price of an ounce of flower on the illicit market, we're kind of being told right now, is between $80 and $100 an ounce in Massachusetts.
Again, but check with your local drug dealer who will have the data
Yeah,
on
I mean, it's all anecdotal, but yeah, I guess walk down the street.
that.
Yeah,
And Andrew, do you know the estimated size of the mass illicit market? I mean, I've kind of said I haven't grown up in the Commonwealth and you know, and knowing that the law enforcement here, it's never been like we have a bunch of like, you know, folks coming in from other countries and setting up these big like grows in the, you know, like we see in California. I mean, it's just like that doesn't exist here. It does exist to a degree, but it's like the police are still kind of on top of it. But I don't know if you've ever looked at that, but maybe you can give an answer.
yeah. So I have, and let me just.
And we don't, I know, Andrew, I want to be mindful of time, and I know you got a lot of great slides, so maybe you can come back to it if you don't have it directly in front of you, and
Yeah,
we can
you know, I do. It's about, so if we just look at resident consumers 18 and over, 2023 at, let's say, $200 an ounce, it would be about $2.68 billion. So, you know, larger than what the Massachusetts market is now, but not a huge amount, right? The amount of total demand that isn't happening in the market. And if we were to reduce that price per ounce to 150, you know, we're really just talking about a $2 billion resident demand there. So, you know, I think that when it comes to what percentage of the regulated market is purchasing, of the total market is purchasing from the regulated market, it's a lot. It's a lot of it, but I think each of those consumers will potentially produce more. So we'll consume more, and that's what we saw with how volume demand has increased with prices declining.
Yeah, and then Andrew, that was another question, which I'm gonna literally have no qualifications to answer, but I'm just going to try and answer it. The first question, which is my feelings about it, and then you two as experts can weigh in, but I would say no to that. Do you think the increase in flower demand is actually New York illicit operators buying product and diverting it into New York? I think the illicit market in New York, or everything I'm hearing, is coming from California and other places at dirt cheap, and then going in and going in and being sold to the storefronts. I think it's a good question in the sense that I actually think it's I know if we looked at these border, you know, there's data out there that got inadvertently released by the commission that shows how well these border dispensaries are doing, especially the ones on New York. I think that they're the highest grossing in the state. And that is consumers coming in and wanting retail, you know, wanting legalized state marijuana. I think are coming in from the border, from the other state, and pulling, you know, that kind of tourist / border state demand. So
yeah. We'll talk about this in the comparison slides at the end, when we compare Massachusetts to Colorado and Oregon, but the price per gram is too expensive in Massachusetts to make post-sale diversion really economically feasible. It's happening from Colorado, California, Oregon, Oklahoma, Washington, not from Massachusetts. Let's jump to the next slide. Cool. So, you know, again, we can look at these, you know, these seasonal harvests, and this is also important to recognize that it's like how supply impacts prices, right? So prices were stable for quite a while until we saw the first supply shocks from that large outdoor harvest come online, and really then start to drop those prices of flower. And that has continued to decline, you know, as you know, additional seasonal harvests have come online. You know, for those who really want to look, you know, deeper at some of these supply and demand dynamics, actually some of the best reports come out of Oregon. You know, I'm happy to follow up with people there, but they have even more dramatic seasonal supply shocks due to the percentage of their cannabis that is grown outdoors. You know, we can look at, though, you know, okay, well, how many harvested plants are there in the intermediate period? You can see probably between, you know, those two spikes in 2021 and 2022 from those fall harvests, it was up and down, but, you know, still probably increasing a bit. Now, what will, you know, really important to look at next year is that in between, you know, those seasonal supply shocks, are we seeing, you know, what is indoor cannabis harvested? Are we seeing that increase, plateau, or decline? because those sorts of factors are going to be really important into understanding kind of what is the supply of cannabis outside of those outdoor seasonal harvests, looking like in the market, right? In order for prices to rebound and stabilize a little bit, supply has to slow its pace while demand increases. And let's talk about that.
Andrew, are we seeing that? And maybe I'm reading this wrong, but we've seen on those green, and is that stabilizing a bit towards the end of that trend line? Am I
Oh,
misreading
towards the
that?
very end, hard to
Yeah.
know. There's really
Okay.
not enough months post the 2022 fall harvest for us to really recognize whether or not the February, March is a stabilization, an increase or decrease. As you can see, there's a lot of bounciness that occurs here, and there's also some kind of quirkiness in the back end data.
Okay.
So if we jump to the next slide, I think this is really important.
And Andrew, just for your time, I don't know how many more slides, but just with 20 minutes left, so I want to make sure you.
Yep. So one of the important things we can see here, and when we look at this from the positive side of things, cultivators are reacting to the increased supply by actually utilizing less of their expected canopy. So this looks at the total amount licensed, the total harvested, and we have plants harvested per 100 square feet of expected canopy from the 2 months prior. So obviously there's a lag time between when you get licensed and the amount of canopy then and what you're harvesting. And what we can see here is that even though there was a spike in 2022, that spike was actually lower. The percent utilization of allocated canopy was actually less than the previous year. And what that is showing is that while we are licensing a lot of outdoor and more indoor cultivation, less of it is being utilized. Now that could be because cultivators with a maybe tier 7 license are only cultivating up to a tier 4 license, or it could be that some people have shuttered their cultivation facility, but still actually have the license and it's technically operational. They're just not growing as much. So this is the market already reacting to really the decline in prices and the stresses. Cultivators are not blindly just growing as much as they can. They understand that maybe they should cut down on some costs, which also mean that they're going to cut down on some supply.
And Andrew, just to boots on the ground, I mean, I know of at least between my clients we represent and talking to other lawyers and consultants in the space, I know at least 15 operators that are either reducing their capacity significantly and due to costs. And so I do think it's an interesting. I'm curious to see how that compared to the other states like Colorado and Oregon and others when they saw that the wholesale market drop out. Are we reacting more is it reacting more proactively on the cultivator side? I don't know if you have an answer to that, but we're definitely seeing that trend. And so
Definitely another, I do have answers to that, but given the amount of time, I can save that for
another webinar
or follow-up conversation. Again, happy to chat with anyone when it comes to more things on comparative pricing. But Mitzi, any final thoughts before we jump into retailers?
Yeah, I mean, I think the thing too that you have to consider is, we had some other economic changes in Massachusetts, which have really impacted pricing, especially with cultivation when it's a heavy labor intensive industry if you're using hand trimmers or anything like that, because the minimum wage, if we looked at the minimum wage starting in 2018 to 2023 and where that minimum wage happened to go, our wage and labor costs have considerably increased, with minimum wage now in Massachusetts at $15 an hour. So that's another impactor, in terms of we can talk later about what it looks like in terms of the cost to produce a pound of flower in Massachusetts. And we talked about it a little bit earlier, but, we are seeing a decline with some of the cultivation facilities of just really trying to control their costs. And that means that they are reducing their flower rooms and they are, producing less than what they're to have been expected to have been producing. And in a lot of cases, it's a cost containment measure to survive to the next stage.
Absolutely.
Yeah.
Yeah, we'll talk a little bit about what that impact is when it comes to variable costs versus, fixed costs for cultivation and what that might mean for a cultivator reducing the amount of supply. But next, let's jump into retailers and analyze where we're seeing new retailers across the state. So I've got, detailed maps put together for, every single operational retailer, as well as those provisional and still final license. And you can see here amongst the different colors, from light yellow to dark red is when they open. So the darker red are the ones that have been here for longer. Opened in 2018 or 2019, where the lightest yellow are those that have opened in the last year, in 2023, with the gray being those that are provisional and the dark gray being those that are final license. Well, let's just jump into a little bit of what we're seeing when it comes to the growth of retailers and average sales.
Andrew, and just going back to that map for a second, just to point some things out, just, because we have a number, we represent a number of and Mitzi as well, of these retailers, and it's very interesting. Do your diligence is all I have to say, because you'll be surprised by some of these numbers. And I talked about the border. People may think, oh, Andrew talks about, in his view, there's a lack of stores in Boston. I think that's in Greater Boston. I think that's generally true. Doesn't mean that it's necessarily translating to revenue. And I think it's really interesting to see as you privy to some of these numbers. You realize that stores can differentiate themselves, and some are performing. I think you're going to get to it, but extraordinarily well in locations you wouldn't think, and then other locations you think would be great and not so much. I will note in Essex County, it's always been a gap of that kind of conservative band around. I can't really control it, but north of Boston, you can kind of see in there, it's a high socioeconomic area that's conservative. And so that's the reason why we're not seeing the cities and towns have not allowed it. So those, you can see the pockets here, but that I would just kind of point out as an area that I think there's certainly probably some room to put more dispensaries there.
Absolutely. So let's jump in a little bit on, the trend in the, cumulative number of operational retailers. And again, operational here is just retail license that have commenced operations. They may not be open yet. It's been a, relatively linear trend over the last 2 years in the size of the number of those new retailers. And with the average sales per retailer, that again, as well, has been declining since the, end of 2020. Currently, when we look at what is the average per sales per retailer, based on the first quarter of 2023, if we were to annualize that, we're looking at about $5.3 million in sales per retailer. That's down from full year 2022, which was about 6.47 million per retailer. And so, it's declining, but 5.3 is still significantly higher than what we were seeing in some other saturated markets. And we'll talk about that a little further. And while it has been declining, the rate of decline has kind of really slowed over the last year or so. And so, we're increasing the number of retailers, but, the average sales per retailer, while it's declining, is not plummeting, which again, is kind of this, what I'll say, we have market maturity. Obviously, when it comes to the capital markets, there's a lot that's not healthy. When it comes to the market maturity in Massachusetts, while it's very stressful for retailers, for cultivators, for people in the supply chain, this is a kind of relatively smooth market maturity compared to what we've seen in some other states.
And Mitzi, I would just ask you, because I think you're closer to it, like margins, what are we seeing at the retail? It seems to me like retail is a great spot to be. What do I know? I'm not business side, but how are the margins? Like, how are they dealing? Are they doing okay margin wise?
It depends. It depends on location. It really depends on volume. It depends on whether or not they own their own building, what their rent happens to be. The thing you have to remember, and I know we've got a slide on it a little bit later, but is the impact truly of taxes on a retailer with 280E. Is it the next slide?
Yeah.
What a perfect segue, right?
So remind me to make my plea to regulators after you do this.
At the federal level, because Massachusetts,
well, I have a state level. I have a state level ask if there's any commissioners on here. So
well, the state, I mean, fortunately, with the reform that was passed in August of 2022, Massachusetts did decouple from Code Section 280E, meaning that now the cannabis businesses in Massachusetts can deduct their ordinary and necessary business expenses to get to taxable income in the state of Massachusetts. But the issue with the retailers is, as you say, it's about 5.3 million for revenue for the average retailer, we know that some are doing much better than that and some are doing a lot less, right? So if you're looking at, say, for example, I mean, if this was your revenue, and this is a number that I've seen in California, $1 million in California is a decent retailer that's been around for quite some time in a very overly mature market that's kind of in round two. So the typical retail margins, we're still seeing about 50%. In some cases, if there's some retailers that happen to be purchasing bulk product and maybe making their own pre-rolls there, they can get a little bit more on the margin. But for the most part, we're hovering around 50%, and that's really across the country as well. So this code section 280E, for those of you who don't know, at least at the retail level, you're going to be taxed on your gross margin, which is revenue less cost of goods sold, which is the cost to actually purchase the inventory and get it to your retail location. So no matter what in this set of circumstances, you're going to be taxed at $500,000, regardless of the fact that your rent and your payroll and all of those other marketing costs cost you $300,000. So in a normal business, at the end of the day, you'd have $200,000 in the bank, and I'm simplifying it. But for a cannabis business, you still have to pay tax on $500,000. So depending upon your corporate structure as a C corporation or a partnership and a pass-through, you may end up in a situation where if you're a C corp, it's a 21% federal rate. If you're a partnership, the pass-through rates are as high as essentially 40% when you add on all these additional kind of federal level taxes. So there's a real issue here when it comes to the viability and cash flow of these dispensaries as the market starts to mature. So again, the opportunity is there to differentiate your product, to try to do something to get more customers coming in the door, to really, raise up that top line revenue, because if the margins are consistent at 50%, you need to be able to cover all of your costs as well as your tax burden. And, unfortunately, we're seeing that in Massachusetts, that this is becoming a huge issue, this year and a little bit last year, related to how taxes are going to be paid from a cash flow perspective as the market matures.
Yeah, and it's just to be clear, that's not specific to Massachusetts. This is that national burden of 280E, right? And
yeah, this is a national burden. So we're just talking about the federal level. A lot of states have decoupled, but not all.
Yeah, in Massachusetts, thankfully, our legislature did decouple. I'm not going to get in. We also passed a millionaire's tax. I'm not going to get into the impact there, but I would love to hear about it at a later date. But one thing I want to say too is I forgot my train of thought here is, just okay. This is my pitch to regulators. I can't believe I was going to forget this. We talked about this 3%, which we've been talking about for years in the Commonwealth. This ridiculous 3% of gross sales that we've been paying in municipalities. And Mitzi's heard me rant about this from the days that she was a Lakeville select person on the select board. This is absurd, and we very much are hoping that the commission, in its infinite wisdom, and is going to issue guidance that matches what the legislature's asked for, which is to eliminate this. And for folks that are listening, I hate to be like the advocate here, but this is a really important issue. If the commission comes out with guidance that is helpful, that I think matches the intent of the law, we're going to see that 3%. We should see that 3% effectively go away, because cities and towns are really going to have to document their burdens, and they can't charge us 3% of gross. We are seeing the Mass Municipal Association and certain law firms really pushing to keep it in place for a longer period of time. But this is gonna be a big helpful thing to the market. So hoping that the regulators, I think they are, but we have potential to have some helpful guidance hopefully down the road that will take away a big sizable expense to these businesses and make their margin, make them combat 280 a little more easily.
Yeah, I mean, just to add on to that, anything that can be done at the state level to help these businesses. I mean, again, the decoupling has been huge. These businesses really needed it at that time. So, and it was good. It was retroactive to 2022. The issue with that, of course, is, we had 4 or 5 years almost of a market where that wasn't applicable. So those early adopters to the licensing scheme, right, ended up paying the burdens of 280E. Interestingly enough, I think it was last week, Illinois finally also just decoupled for 2023. So, states that have been in the adult use market for quite some time are finally kind of seeing the impact on these businesses. And while we can't necessarily do much more, although HCA reform is a great opportunity, it's really at the federal level. This truly 280E is really a huge burden on all of these cannabis businesses in terms of cash flow and viability.
So let's jump on to the, I'm gonna go a little quick for these last slides, given time. And we can chat about that more later on if someone interested and wants to reach out. But we're looking really at specifically here for the rest of this section, Boston metro area. And next slide. When I talk about Boston metro, I'm using the Massachusetts Area Planning Council's inner core committees. You can see that in orange. Which kind of communities we're including. So Boston, up to Lynn, out to Waltham, Milton, Quincy, that sort of area. So next slide. And one of the interesting things, when we look at the number of retailers, both that are the Boston metro and the total in the state, we saw a significant increase in the percentage of retailers that have been issued in the Boston metro area. Now, this is probably positive for a few reasons. One, I think that if there is still kind of a black market in the way that we think about it, it's probably more so Boston metro area where, the high density of population allows for more of that illicit market. And with the addition of those retailers, hopefully we'll be capturing some more of that. Furthermore, everything's gotten more expensive in the Boston metro area, and we're likely going to see those retail prices also be a little bit more expensive on average. One, that's going to, increase on average the amount of cannabis that's being sold at slightly higher price points. It may also be that, there's a little bit more wholesale margin for them to work with because they have those higher retail prices. Now, of course, as Mitzi can get into later, that really depends upon what whether or not those retailers have that margin to deal with, because, are they dealing with crazy rent prices? But these are kind of positive as it pertains to the Massachusetts market going forward. Having more and more retailers in areas that are not as saturated. And hopefully, as Adam mentioned, we'll get some more of those in that north of Boston area. But we're not seeing in existing, whether it's Worcester or something else that already has a lot of stores. We're not seeing more and more stores pack into those places. We're seeing stores open in Boston where they are really needed. So next slide. So let's talk about what this pertains to as far as the population per operational store, right? In the Boston metro currently is about 38,000 people, per storefront. At the state level, it's 24,000. 65% of operational retail licenses are in the Boston metro area. And if we were to, consider what does this look like if everyone got, their who is final and provisional retail license, if they all became operational, it'd go to 26%. Even though if we were to, add all those different, still pending stores, Massachusetts, would be about 15,000 consumers per store, but the Boston metro area would still be about 19,000. So the difference would decline, but the Boston metro area still has significantly more residents and more cannabis consumers per store than that state average, meaning each of those stores are going to, be essentially a larger volume. Of course, the top, probably 10% of stores, some of those are going to be, whether or not that on the New Hampshire border, on the New York border. But if we talk about, excluding some of, or Fall River on the Rhode Island border. But if we look just in, in Massachusetts themselves, predominantly taken from Massachusetts consumers and not, from border consumers on other states, these Boston stores will likely move more volume, which again will help with some of that oversupply issue, getting that through the market eventually to consumers. Mitzi, any other thoughts before we jump into concluding thoughts?
No, I think we can talk about what our concluding thoughts happen to be.
Yeah, and Andrew, I'll just say too, I think that last slide you showed really doesn't talk about that. It doesn't take into account kind of the tourism factors, right? I mean, talking about that really in that border states, we have a good, I kind of got back to it. The Commonwealth, we're very snobby up here. We think we're the best because we are. I'm just kidding, but no, but I mean, we have a good, stable kind of like industry. We do have an expensive labor market, but a lot of things going for us in terms of like the ability to maintain that demand. And Andrew, I thought you had a slide on how many stores, like how we're doing compared to other states, but maybe you took that one out.
That's gonna be the next one. So let's actually jump into that.
Okay,
yeah,
perfect.
So compare Colorado and Oregon, right? So we have about 285 retailers in Massachusetts compared to 671 in Colorado and 822 in Oregon. The number of cultivators far less. It's less than 10% of the cultivators in Oregon. Because of that, while we are on our march towards market maturity, we're not nearly saturated in the same way, right? We're dealing with a average price per gram in March at the retail level about $6.23 per gram. compared to less than, $3.50 in Colorado and about $3.67 in Oregon. And so, these are kind of positive while we are moving towards that. If any investors are like, Massachusetts, you're just like Colorado and Oregon, show them this slide. We're not anywhere near close. And I don't think Massachusetts is ever going to get there. And the reason I don't think they're going to get there is because the price of production in Massachusetts is much higher than it is in Colorado and Oregon. The price of commercial real estate, the price of workers, the price of energy, and so essentially your bottom out price. So the price at which people start going out of business is going to be a higher price in Massachusetts. And so I don't think you'll ever get to that below $3.50 per gram, until post federal legalization when we have interstate commerce. Great. And now when we're talking about what do we need, right? Really what we need is we need to increase the percentage of consumers that are accessing through regulated channels. That's both consumers who don't go shopping from regulated stores, as well as consumers that go to regulated stores, but don't purchase all of their cannabis. So that means, we need more stores in these underserved areas. But that doesn't mean we're, the new stores in Boston are just going to be serving budget cannabis. Really, as the prices decline across the board, we will see some of that higher tier cannabis quality, more demand there as well. Maybe some cannabis consumers were willing to purchase really, really good cannabis at, $200 an ounce, but not $250 an ounce. So, and also, we need to, this is really the case across the country, we need to expand and simplify delivery. It's all about increasing demand. The more demand that we're able to move through the regulated market, the better that's going to be for retailers, manufacturers, and cultivators. And then when it comes to balance, as Adam was saying, there's, regulatory changes, HCA reform and others. As a cannabis business operator, you need to be looking at your projections. You need to adjust those projections based upon the real data. And you need to renegotiate, your contracts, whether or not that's, with your landlords whenever possible. You need to evaluate your cultivation expansion and prepare for those seasonal supply shocks. So, don't expect really high prices in the fall when, we're seeing seasonal supply come online. And if you can if you're an outdoor grower, build storage warehouses so you can hold some of that inventory for the longer period of time and sell it in the spring and this early summer when prices are higher. And then you need to identify product categories with less price compression. That may be that, the higher quality, that may be, higher quality flower, that may be a unique product type. And, really what you need in order to get your margins healthy enough to continue your operations.
Andrew, that was awesome. And we are over, and I apologize. Seems like every webinar I participate with, probably because I just talk too much, we're over, but I want to thank, so we have some questions. I think we should try and, if the panelists can, maybe we hit the questions offline. We can try and hit some of them now for those that want to stay on. Mitzi, I just want to give for some closing thoughts. I just have like one quick one, but I'll let you go first.
Yeah, I think, when you look at the Massachusetts market, there are certainly opportunities here, especially when I look at specialty manufacturing. That's been, something that I see across the country that really, branding, manufacturing, specialty products seems to be a little bit more immune to the supply and demand pressures that we see in the cannabis industry. But I do think that you have to be careful about the Massachusetts market because, location for a certain store can mean the difference between profitability and, being taken over by your debt holders. It's a little bit difficult out there in general, but I do think that if you kind of really analyze the numbers and you look through what the possible performance could be of these companies, that as long as you're keeping your costs contained, you're really watching your internal controls and you really have a good manufacturing practice. If you happen to be in manufacturing, your cultivation is done at the highest level, but truly your management team is looking out for the long-term interests of the company, then I think you're in a better position. It's not a rush to market anymore. It's a market that really requires a higher level of sophistication, I think, to survive.
Yeah, I agree. And I'll just sum up with, we got to be thankful, and it might sound like I'm being a brown nose here, but I genuinely believe this. We got to be thankful for our regulators in Commonwealth. We had a first cohort of commissioners that were learning, and I do think there were probably a few mistakes along the way with the regulators. We have a new slate, and they're really it's always been the commission is very, very open, including the executive director, to having conversations. So don't rule out this ability to shape the regulations, reduce that regulatory burden. I talked about an HCA is super important, but also around marketing, around certain things. We have regulators that are willing to listen and be thoughtful and have kept us safe. And I think, you know, we don't have this problem with novel cannabinoids. We talked about illicit market. We have a lot of positives, and that I think is we can thank the regulators in that regard to having a stable market, and a market where people have confidence. I know people, you know, when we talk about ways to make lab testing more efficient and things like that, but overall we have a safe market, and I think that's really important. So thank you, everybody. I don't know, Andrew, how do you want to handle these questions? Do you want to answer them?
I'm happy to answer some of them if people want to still stay on. I've
Okay.
got time. Adam, let's see if you need to drop.
I think I'm told I need to drop. Yeah, but thank you, and thank you again, Mitzi, for late edition. Really awesome, both of you. So appreciate it.
Absolutely.
Awesome. Thanks so much. So we'll stay on for those who had questions. So all right, I'm going to go through them quick. So, you know, what's typical need, cost, and source of borrowing capital for Massachusetts operators that you've seen? I think Mitzi's typing out an answer there, so I'll let her answer that one.
Yeah. Do you want me to just do it quickly? Because it's probably the easiest just to say.
Yeah. Do it by voice. It's going to be faster than typing.
Yeah, it totally depends. You know, if you're looking for a cultivation facility, you're looking for a small cultivation facility, you're probably looking at $2 to $3 million if you can, you know, figure out how to do it well. Manufacturing, probably $1 to $1.5 million. And if you're really lucky on the retail space, you can do it for about $1 to $1.5 million. You know, it's the borrowing cost of capital now. We're seeing somewhere upwards of 12 to 15% again for debt. So it's becoming much more difficult to do that. That's why I think we're seeing a lot more smaller operators starting to come into the space as opposed to the larger ones from the beginning, where it was a $20, $40 million large cultivation facility. We're just not seeing those come online any longer.
So next question about New Hampshire. They appear to be coming online with potentially state-owned adult use industry if they do decide to legalize. So when is that going to happen? So I've had, you know, in-depth conversations with Marijuana Policy Project, which we're very close with, as well as some former MPP staffers who now do a, you know, intense government relations up in New Hampshire. I don't think it's going to probably pass this year. I think it probably will pass next year. I think it will probably be a combination of state-owned stores and some private enterprises. Obviously, some of the existing medical operators are trying to not have it just be through state-owned stores. So we could see a combination of what we actually see in some provinces in Canada with crown corporations. They won't be called that in the US, so state-owned corporations and some of those private ones. But that really kind of seems like what they want to push for. Now, what will that cause as far as prices? I think New Hampshire will undercut Massachusetts prices, particularly for those state-run stores. Now, can they do that if all of the cultivation is still privately operated? We will see. It probably won't undercut it as fast as they do for liquor. That will dramatically impact those facilities on the border of New Hampshire. But it's also important to recognize that New Hampshire operators have been going to Maine too. They're going to be able to potentially go to Vermont. Oh, probably less so. You know, those, if you're on the border, you may be making a ton of money right now, but that's not necessarily stable for the long term. So there's that for New Hampshire. What's the average net revenue for a dispensary in Boston? I don't have that info. Mitzi, you got any gut reactions? What you think the annual net revenue is?
I think that there's too few to make that determination at this time. I mean, I think you're probably likely for a dispensary, you're probably looking at $10 to $12 million right now. It could be more. I mean, it's kind of like, depends on location.
Where do each of you stand on the commission capping the number of cultivation licenses it issues? I am always opposed to license caps. I think that they are ineffective. I think that what they do is just create further market distortions. We are already seeing cultivators reduce the amount of supply given the market conditions. And all caps do is artificially increase the value of that paper. And I think we should do all we can to have the value of a cannabis license be based upon the production quality and the value you've put into it, and not based upon some artificial value bestowed upon you by the state, as we see in many other limited license laws. But that's because I'm just anti-limited licensing.
Yeah, and I think with this one, I mean, the state does have relegation, tier relegation. So I think it's already there. That's one thing to kind of consider. I don't think it's necessarily a bad thing. But then again, I see the impact of, you know, in multiple states of too much supply and businesses going out of business. And again, if we didn't have this 280E federal issue, then this probably wouldn't feel that way, you know, and let the markets decide where they're going to go. But it's just a difficult industry. So I don't see, I just don't see people coming online with large cultivation in Massachusetts any longer.
Yeah, I think the market's already self-correcting.
Yeah.
And you know, if we ever got to a rebound point and we needed to increase supply, a license cap just makes it harder to do that in an equitable way, rather than just allowing the existing operators to scale up again. All right, next question. Do you hear anything about the push to grandfather in existing HCAs by municipal associations? Any idea as to argue against this? Probably an Adam question.
That's more, yeah, more legal.
Right. We'll see if that we can send that one to Adam later on. Do you cover the impact of testing on the market? I mean, testing does a number of things. So in my mind, one of the biggest issues is actually associated with the seasonal supply harvest, creating longer periods of time to be able to get that that cannabis approved and tested, right? So, you know, if you're testing market, and I think the testing market in Massachusetts is pretty good, but if you have a situation and I've been talking to, you know, I did a lot of consulting in Vermont on this, where the market's much, much smaller and the percentage of outdoor is going to be much larger percentage of the total market. But during those seasonal supply shocks, you can have a situation in which it just takes longer to get that test turnaround because there's just a ton of inventory flooding the market all at the same time, and that will impact testing as well.
Yeah, I think it more so impacts cash flow, you know, of the operators in trying to get their product ready to be sold or to be sold, waiting on testing. So I want to take this next one because the state excise tax, it kind of dovetails back to the New Hampshire question earlier, because if those of you who are native Massachusetts folks, back in 2010, there was a ballot initiative to eliminate sales tax on alcohol. So it's always up and open, right? And the reason why, you know, one of the reasons that was argued was that New Hampshire isn't charging sales tax, and therefore it's, you know, destroying the competitive market in Massachusetts for sales tax on alcohol. So I think, you know, Ted, you want to be the first person to sign that petition and get that going, by all means, you know, citizens petition is alive and well in Massachusetts.
Cool. So next one about the population numbers. So those population numbers were really just looking at the populations of those different towns within that, you know, metropolitan area planning council, ICC, the inner core committee. So the population of those towns, as well as the total, the sum of those populations of the towns, and then the total number of stores in all of those areas. So, you know, we weren't looking at consumers, we weren't looking at 18 plus, we were just looking at total population, trying to make this easy. And that's why, you know, obviously, you know, we weren't talking about, it's obviously not 39,000 or was it 38,000 or so consumers, that's just total population, but of course that correlates with that. So next one, hospitality can be an enormous boost to the industry. I agree. That's the one thing I think we've been, you know, missing a lot when you talk about margins. And of course, you know, margins are one of the most important things for a cannabis business. You know, your margins on alcohol sold through a bar, much, much better than alcohol sold through a retail store. And, you know, if we took away all of the bars and restaurants that sold alcohol in Massachusetts, your total, you know, liquor sales and total beer and wine sales would be significantly lower than it is today. And so that's really what the cannabis industry is dealing with. You know, we only have storefronts. We don't really have on-site consumption. That's going to take a while. Obviously, there's a lot of municipal approval needed there, but I think hospitality is one of the probably the most important things to increase and induce that additional demand. Mitzi, any other thoughts before I think that's our last question?
No, I mean, I think that 2023, you know, we're going to see some regulatory guidance come out from the Cannabis Control Commission. Just pay attention. It's just an exciting time, I think, for the cannabis market. And that's really all I have.
Awesome. Thank you, Mitzi, so much for joining.
No problem. My pleasure.
Adam, for us, you know, as well. Thank you for everyone participating. I know we're like almost 15 minutes off over, and you know, still have 75 participants. Thank you, everyone, for listening. If you are interested, you can reach out to myself, you can reach out to Adam, you can reach out to Mitzi. All of this data I have been tracking for years, and you know, sell kind of detailed data templates for flat fee to clients. If you are interested in Massachusetts, please reach out. If you're interested in other states as well, you know, analyze this type of data really across the country. I've been doing this for over a decade, and really want to help, you know, cannabis entrepreneurs, investors, people that are interested make these educated decisions about whether or not to sell a license, hold on to a license, acquire a new license, build out, and really how much should they be spending in order to be profitable in the long run? Because, starting up a cannabis business is hard, but continuing to be profitable is harder, particularly as this market matures. And, we're here with experience and in-depth information to hopefully make sure you succeed.
All right.
Thank you so much. Thank you so much, Mitzi, for joining. Really appreciate it.
Thank you. Bye.